All right, we'll go ahead and get started. I think people are still going to be funneling in throughout the entirety of this event, but thank you so much for everyone for joining us this evening as DataCon LA presents Ask ABC Fireside Chat. To go ahead and get started, I'm just going to give a brief rundown in terms of DataCon LA, and then we'll go ahead and jump into our Fireside Chat. And throughout the entire time, feel free to use our Q&A that's at the middle section of the Zoom panel. So go ahead and drop any questions that you might have for our panelist, David, today from TenOneTen Ventures. But for a little background, for those of you who are not familiar with DataCon LA, it's the largest data conference in Southern California. It's spearheaded by Subhash D'Souza and organized and supported by a community of volunteers, sponsors, and speakers. DataCon LA features the most vibrant gathering of data and tech enthusiasts across Los Angeles, and started in 2013 and quickly amassed a large following over the years, and now growing to over 2,000 attendees as of 2019, and then having a successful virtual conference in 2020 due to the pandemic. But to go ahead and get things started, my name is Germain Louie. I am your host for today, and we are lucky to be joined by David Waxman from TenOneTen Ventures. For background, David has nearly 2 decades of experience as a technology entrepreneur after graduating with a master's degree from MIT's Media Lab in 1995. And he's a 3-time founder, co-founding Firefly, an early pioneer in personalization and privacy technology, which was later acquired by Microsoft in 1998, which is now known as Microsoft Passport. After Firefly, David co-founded People PC, a company dedicated to simplifying the process of joining the online world. And People PC served over 600,000 individual subscribers, as well as Fortune 100 corporations such as Ford Motor Company, Vivendi, Universal, and Delta Airlines. People PC later went public in 2001 and was acquired by Earthlink in 2002. And in 2005, David co-founded SpotRunner, a LA-based tech company that worked to revolutionize the way advertising was created, planned, bought, and sold. And since leaving SpotRunner, David has dedicated his lifetime to helping entrepreneurs realize their goals. And today he's an active mentor, speaker, and investor, and currently lives in LA with his wife, 3 daughters, and I've heard even from Minnie herself, lucrative numbers of pets. I don't even know if you can count them anymore, David.
I can count them, but you don't want me to. You got those dates make me sound really old. 1995, I wish you left that part out. But anyway, I do have it's actually 2.5 decades in tech.
Amazing. Well, we're so grateful to have you join us today, David, and lucky to be partnering with TenOneTen for DataCon LA this year. But would love for you to just be able to give a background of TenOneTen Ventures to start things off.
Sure. So my partner Gil Elbaz and I started TenOneTen. We actually started it without outside limited partners, just as our own sort of a formalization of our own angel investing back in Los Angeles in 2013. In 2013, we looked around and we saw, LA was emerging as a tech hub, although it really wasn't prior to then, and it was pretty early still in terms of the technology scene here. And what we saw at that time was a lot of companies that were focused in tech, or venture capitalists were focused on things that one associated with LA at the time: media, entertainment, fashion, very consumer related stuff. And we're techies, and we thought, well, there's actually a lot of tech going on here. There's the aerospace industry, there's Caltech, we're seeing lots of companies emerge in this marketplace that we want to be a part of, and who need funding from people who are more like us, who have technical backgrounds and who have operating backgrounds. So we took that opportunity, and we raised our first fund with outside LPs in 2014, and we just started investing out of Fund 3 now.
Amazing. I know it's not been easy to start a new fund, especially with the events that have happened the last year or so. And I mean, just to have this focus around deals. But obviously, a lot of us have been starting to think about pandemic. People are starting to transition to that post-pandemic conversation, but would love for you to be able to give a look back into the past year across the investment landscape, specifically the venture side, and some of the conversations that you've been having with some of your portfolio companies even.
Yeah, so last year was, it was a surprising year on so many levels. and a shocking year on different levels and a difficult year on different levels. Um, and when things really started to become apparent in, say, early March of 2020, I think the common wisdom, including our wisdom, was, hey, this is going to be really tough. We should batten down the hatches. Everybody should, if they have burn, they should probably cut that burn and be ready for, what could be an extended winter. And what happened instead was that, after a pretty brief time when really nobody, sort of sales generally froze in a lot of industries, things picked up, and they picked up to a surprising degree. And one of the things about TenOneTen Ventures is that we focus on data, we focus on automation, which comes from data and machine learning, and those things flourished surprisingly during the pandemic. And our companies across the board nearly did better than ever and raised more money than ever. So the winter that we all had expected never really came, at least not for our venture portfolio.
Yeah, and I think it's important to just kind of take a double click in there with TenOneTen. I mean, you mentioned that the primary focus there is around software and tech sectors. Obviously, as you've noted, for some of the maybe like consumer type companies, they definitely had that longer winter, as you mentioned. But as we're starting to open up, people are getting vaccinated. How's the dialogue started to change with some of your companies? Are they hiring more? What does that adjustment look like from an operational perspective?
So from a business perspective, things have been pretty uninterrupted since June. So for the last year, everything's been pretty much up and to the right. I think what's happening now is people are figuring out, okay, now what, in terms of going back to work. And so on a very tactical level, like, gee, we've hired employees that are in different geographies. People have gotten used to this different work style. Some people, including us, have found at least parts of it very efficient. And people are figuring out how to go back to the office, what that looks like. And it's, as I said to you before we started, it's a pretty unknown world and unsolved problem. I think a lot of people have figured out how to be completely remote or have a few people outside, but to be hybrid is something that's not been proven by a lot of folks.
Yeah, I know that's a common question across, definitely across the tech industry, as we're trying to figure out where do we source talent, but then how do we retain talent? And I think a lot of us have definitely found, productivity tools that have allowed us to operate a lot better at home. And then for other individuals, being able to apply to different jobs all over the country as well. And I know we'll dive into that a little bit further later, but do want to take a step back. And from your perspective as an investor, what were some of the challenges that you may have faced as you were looking at the valuation of companies? How do you think about which companies TenOneTen wanted to invest in specifically during the pandemic?
Mm-hmm. Well, I think in the market generally, there's a lot of money in venture right now. It's still, for perspective, a very small slice of the total capital that's out there trying to find alpha and trying to find, to make earnings. But because interest rates are so low, because the stock market and a lot of other markets feel really high right now, people with money and institutions with money are looking for places to make that alpha. And venture capital has been the recipient of it. And I think for pretty good reason. There's a lot, I think the pandemic accelerated a bunch of trends that were happening already. There was, I think the sort of more flexible work, future of work space was something that was interesting before the pandemic, but just got an enormous shove. And this went across all kinds of different industries. So we do some health tech investing, and healthcare changed a lot. There was a big change in legislation where providers could provide do more as telemedicine and do it over state lines, which completely changes the economics for a lot of health tech businesses or healthcare businesses. So there's been this big sort of push from the pandemic of all these trends, and there's lots and lots of companies being born and lots of problems to be solved that have been uncovered or opportunities that have kind of revealed themselves, and there's a ton of money chasing them. So the whole field, I think, has become a bit more competitive. And as people start new funds or people with funds make bigger funds, it's, there's the valuations have been pretty steadily increasing, and the time to make a decision has been shrinking, and our jobs have become that much harder. But I think the economy is going to reward us for working hard in this new competitive environment.
Yeah, I know even with the valuation piece, just some of the other conversations that I've been hearing around is, valuations are starting to skyrocket, but how do we deploy capital without the actual value being diluted from the investor standpoint as well, because of how competitive it does appear to get, especially with, when you're competing around, I don't know if this has actually come up with TenOneTen more specifically, but for example, from private equity firms or growth equity focused ones starting to come down market, has that impacted TenOneTen's investments?
Mm-hmm. Well, everybody is changing. First of all, the names of the sectors change. The name of the stages have changed, right? There didn't used to, when I started, there didn't even used to be a C. That you started at A, and that's, it was the first letter in the alphabet. Now there's seed and pre-seed and post-seed and pre-seed and so many different flavors. But more importantly, I think investors are looking to where they can go, because fund sizes kind of determine your strategy a bit, right? If you have, if you want to make 25 investments or 30 investments, whatever your goal is for a portfolio to have the appropriate amount of diversity, and you want to own, you want to be able to return your fund with the success of one of those investments or more than one of those investments, the math all has to work out. So I think everybody has been, going earlier, so that's seed stage investors going pre-seed, A round investors doing seed, B round investors doing A, and even growth investors. Like I hear Tiger Global is now investing in a lot of Series A rounds, which is kind of surprising given their past as a true growth investor.
And there's also been, the conversation with other firms starting to create a SPAC fund as well. I'm sure that's a hot take as well.
Yeah, I
know LPs aren't happy about that.
Yeah, LPs aren't happy about SPACs or about people doing SPACs out of their funds.
About funds being created specifically for SPACs.
Yeah. There's a lot going on. A lot of, like I said, people with money are chasing alpha. They're trying to figure out where they can get a good return and beat interest and beat inflation. And it's created a little bit of a frenzy.
Right. And I know for our audience, I'm sure we have a variety of different people, whether they're, entrepreneurs, startup founders, or maybe they're thinking about this. I know you mentioned the variety of different types of fundraisings, from the pre-seed, seed, to all the different alphabets on the series side. Could you provide a little bit of context into what each growth stage looks like, and perhaps for these founders as they're thinking about, what are some of the investors that we should be targeting as they're trying to pitch their own business?
Yeah, I think trying to keep in, the letters might not be that helpful anymore. Almost, it's I think the way we think about it is sort of in terms of progress and how much a company is raising and valuation, right? So if you are just getting started and you need, there's still the friends and family or angel round if you need like a few $100K to get going, and a lot of founders still do that without going to any institutional investors. But right after that, if you want, say, $1 million or 500,000 to $2 million, there's a crop of investors who call themselves pre-seed investors. We have a couple of great ones here in town. And then a lot of seed funds will also consider that, and they'll call it a pre-seed, but it's really a, that like I said, that 500 to 2 million range. Although it changes by day. Sometimes I hear about a 3 million pre-seed. But that usually also means a company is very, very early. Maybe they have a product, maybe they don't, maybe they have customers, maybe they don't, but it's really the birth of a company. And then traditionally a seed round has been and our sweet spot is still when a company has a product, they've got some reaction from the market. They, maybe have some customers, either proof of concepts or real customers, and maybe they're making, 300K to $1 million a year in revenue, and they're raising $2.5 to $3.5 million. That's where we play what we call seed. Once again, some seeds are $5 million these days, or $7 million. And then what's being called Series A is probably what used to be called B, but it's where you really have some traction. You have a product, you have some market proof, you have probably some revenue if that's applicable to what you're doing, early revenue, and then you're raising $10+ million. And that's where the sort of the bulk of the Sand Hill Road money is still, where the bulk of the money is still coming from Sand Hill Road, and that's powering a bit of growth. I hope that wasn't too confusing. It's confusing to me.
I know, I feel like every time, people nowadays people just do a quick Google search and they start to look at all the different funding types. And I know, like 500 startups, YC, they all have a plethora of resources, and I'm sure there's several others out there. And I know you touched on this a little bit in terms of TenOneTen. Could you give us a breakdown of the investment criteria that TenOneTen is specifically looking at, from if it's the product market fit, founders, location, even? What does that look like?
Yeah, so we're pretty flexible on stage, more flexible than some. So we'll go anywhere from a very early company, even from a couple of founders and an idea, to a company that's already raised some money that wants a little more money to get to where their Series A should be. So we haven't narrowed our focus as much as some have in this market. I would say for us to go early, it has to be a space or a team that we kind of understand pretty well. The less we understand, or we have native expertise on our team in an area, the more we want to see market signals to help educate us. But we've done investments across that spectrum. And in terms of geography, I would say probably half of our investments are in LA. We have no geo mandate, but that's because of where we're known and where we have connections. I would say about half are in LA, and then another 30% are somewhere else in the country, and then 20% are specifically in the Bay Area.
Gotcha. Yeah, I know I see some questions coming in as well around some of the location factors. And I believe you hit the nail on the head there. In terms of all the flexibility given, I'm going to quote Dennis G here, on the post-COVID world, do you see any changes in perhaps that breakdown of the percentage that TenOneTen is investing in? Is it always going to be dominantly in the LA market, or do you think it would expand if there is a good fit for TenOneTen in particular?
Well, it has expanded. So we've always been fairly flexible on geography. So here, my take on it is, listen, the reason that you have these venture scale outcomes is because you have companies that dominate a national or global market. And ultimately, if you're dominating a national or global market, like where your HQ is not the most critical factor. It's easier for us to see people in person when they're in LA or in California. It's easier for us to do a lot of work with people who are in the same time zone, but that doesn't really stop us. We have a couple investments in the UK. We have an investment in Jerusalem. We have plenty of investments in different places in the US. But we're never going to say we have to do this many investments in a certain geography. We just let it, we see the deals that we see, and we try and do the best companies that we can.
Yeah, and I think that's like the flexibility from the VC angle. There's not necessarily a higher mandate or a larger team size at the investment committee level. So I think for our audience there, I think the message there is have additional conversations with multiple potential investors and see where there might be the most synergy from a win-win strategy perspective as a partner to your company's growth. Does that sound about right, David, or is there anything that you might add to that?
I'm not sure I understood. Can you say that again?
Yeah, I'm thinking, from kind of that, it sounds like for individuals who might be seeking investors, location shouldn't necessarily matter for how they look for investors, but more so about the win-win partnership with investor and the company.
Yeah, and it depends on what you're looking for, right? If you want somebody who's going to be proximate and in your geography, and you really value face-to-face meetings and want to spend time with them, then that's something to look for. If you really are happy to talk to your investor on Zoom and maybe get up and at a comfortable time for their time zone, you can be anywhere you want.
Right. And I'm laughing at this just because I mean, I remember listening to 10-1-10's podcast with Minnie interviewing you as well. The question came in, and I'm just going to read it right there. What are your thoughts on a solo tech founder with a great team?
A solo tech founder with a great, well, so I have a little bit of a bias, and I admitted that on that podcast, and I'll admit it again here. I'm not a big fan of solo founder companies. If you look at the iconic companies that have been built that we all can name, even when there's a founder that stands out like Bill Gates or I don't know, Steve Jobs, I guess is a little bit less fair. Even for those companies, there's usually a co-founder. Bill Gates had a couple, and having that team dynamic, having the ability to have someone who really is responsible to the same level that you are as a CEO to the rest of the team, to the investors, to the mission, I think it's more powerful. Sometimes I say that, and I also feel like I have to say, like, I believe even less in shotgun weddings and trying to like quickly find a co-founder, because it's a very, very big personal long-term commitment. But just my preference is to find teams that are already teams, find founders that are already working together. And some of my partners don't feel as strongly, but that's my take on
it. And then, I mean, as founders are starting to look to raise capital, maybe it's their first time even with family and friends, or they're going into that pre-seed aspect, if it's a solo founder or if it's multiple founders there, what advice would you give them as they're beginning that journey?
I mean, I think spending time on really understanding your market, not rushing to raise a lot of money. Once you just kind of turn on the clock, a lot of expectations happen. And yes, I completely understand that people can't always afford to leave their job and really commit without having raised external capital. But the longer that you can hold out, pulling in the venture people and kind of work on your idea and make sure you've got it solid, I think the better position that you get in going forward.
And I mean, as they're starting to have those conversations and they're beginning that pitching process, I mean, I know DataCon LA, for example, we're doing our startup showcase later in October. But from your perspective, what are some of the key things that you're looking for in their pitch presentation? I know you mentioned components with, really understanding your market. Could you dive in a little bit deeper there as well?
Sure. We often, as I said at the beginning, we often look for technical teams and people are building something technical. And so, looking at the product that's being built or conceived is obviously a very important thing, but also, and maybe a little broken record, like seeing that technology really has a home, like it's not a technology searching for a problem, but it's a problem being solved by a technology. We look for that. We look for teams that have a good reason for doing what they're doing. Either, it's maybe a problem they've experienced firsthand or through somebody close to them, a problem that maybe they've been thinking of for a long time. That's preferable to someone who's just kind of looking for an idea to start a company. There have been some great companies started that latter way, so that's okay. But what we say sort of in private is team and TAM. We like a really solid team in a big market that's growing, or a potentially big market that's growing. And for our stage, that's kind of the most key thing. We don't want to be playing in a very, very small market, and we don't want to have a team that's not going to be amazing enough to change course when they find out they need to, and keep going when things get hard.
And I imagine even for some of the conversations that you may have had with your portfolio companies during this time, their market may have shifted, or they may have added in additional markets. I know, like specifically as an example, I remember speaking with a company who, they were primarily doing event management software, and obviously with the pandemic, events stopped happening, and they ended up shifting to a model where they were working exclusively within hospitals and trying to manage internal operations in that aspect. Have you seen similar conversations happen from a go-to-market perspective with your companies in that similar maybe software landscape?
Yeah, we have it happen all the time. I'll tell you a story, like a pretty epic pivot. We had a company, we have a company called interviewing.io, and it is a platform for people to do blind code interviews and kind of, if you're an engineer, practice for a coding interview that you might find at one of the big FANG companies. And for those companies to find talent who can code but might not look, might not have the resume that proves that they can code. And as we all know on this call, like, resumes actually really don't prove that you can code. Coding proves that you can code. And that company was very much focused on the buying side, on the hiring side. And they were saying, look, we're going to uncover this supply for you. And they worked with, supply that people who you might not have seen at the door recognized because they didn't have Stanford computer science on their degree, but who are really very capable and awesome. And they still have some very big customers like Lyft and Facebook and folks like that. And they were successful in that they would bring candidates back to those companies, even candidates that had been rejected through their sort of main front door, and got them interviews, and some of those people got hired. In early summer, it started to be really hard to get anyone to pay for recruiting because everybody in these big companies was really focused on making their team smaller and hiring freeze. And so the company started to realize that they were providing a lot of value to the candidates who wanted the practice, and started charging them directly. And the company's revenue ramp went good, and actually it proved to be a more stable, even better business to have people pay for the product that they were getting, which is the coding practice. And they're doing extremely well now. And the other side is the market is coming back. So absolutely, like, you can't be set on, as much as you need to understand your market, you also have to keep understanding it as it changes, and be really flexible to go after, the opportunity wherever it is.
Yeah, and I think that's just so important, being flexible, especially at early stages as you're continuing to test ideas and maybe expand into different markets or different product lines as well. And obviously DataCon LA is a data tech conference, as well as TenOneTen having a tight focus there. As you're looking into companies, meeting with these founders, how important is technology when you're investing, or even operationally when you're working with a particular company for their internal procedures?
You mean how important is the tech in our total evaluation of a company?
Correct, in terms of the technology that they're using to run their business.
Sorry, the tech that they're using to run it, or the tech that they're building to sell? Maybe
I guess we'll go twofold. Starting with the tech to run their business, and then the tech that they're building to sell.
There's a pretty sort of a common wisdom thing that people say, that do things at the beginning that don't scale. I think it's at the beginning, when you're really figuring stuff out, and things are quite fluid, and you're figuring out your customers, and you're figuring out your go to market and all of that, and your product, like, it's okay not to automate everything. In fact, it's better. You don't want to start necessarily putting a big technical infrastructure in place when the thing that it's supporting is changing. So I think it's totally fine to not use a ton of tech, and to not be, to do things that don't scale when you're starting out. And then as you get more certainty around parts of your business, then to scale them, to either bring down costs or bring up your own scalability. That you can do that on an as needed basis. So that's the answer to the first thing. And then in terms of the second question, it really, what we do kind of think about when we make an investment is what is this company's moat and what will it be? Usually companies don't have a lot of moat when they start, right? Very few, because they're just starting. So there are some that have a technology moat, maybe this, a technology that's they've been working on for a long time, or have come out of a university, or they've been collecting data that's hard for anyone else to collect. That's pretty rare. It's more that we have to believe that they will build a moat over time. And one of the reasons we love data companies is because data moats do accrue over time, and they become very hard to compete with by other companies.
Yeah, it's definitely interesting.
You can unpack it if you want.
Yeah, there's definitely a lot to unpack there. Sometimes you have investors who go in I think more so from an early stage. It's okay to not have all the systems in place and automated, to your point. And as they continue to mature, that's where they start hitting a certain growth point, and it just makes sense. Maybe we should start automating here, or maybe we need to start hiring talent to help fill in some of the gaps there.
Mm-hmm. Agreed.
And I know, we brought this up earlier in terms of the talent pool. But we're beginning to see, more companies going towards that remote model or hybrid model. And I guess the question there is, how do you really attract and retain talent specific to the LA area? I know there's no, clear-cut golden nugget there, but from your perspective, what are some of the conversations that you've been having with your founders as they're looking to help, build out their tech team? I know that was a question that you had earlier from an engineering standpoint.
Yeah, so it's, I think obviously if you open your geographic aperture and you're willing to hire people who aren't in, proximate, then you have more people to choose from. And there are a lot of great engineers who don't live in LA. And so if you're willing to do that, that's awesome. But you asked about retaining, which is another thing, and kind of I think the problem that's still pretty unsolved is like, where I don't have a lot of data is like, how do you build a team culture and can nourish that culture and have people feel like they're really part of it when they're not all in the same place? And you can look to some great examples from companies that have been doing remote for a while. But I think there's I hear a lot of questions around hybrid, like how, will you feel like you have two different teams if you have people who are in the office and people who never come? Will you feel like, are you just going to let people come to the office to kind of be with each other? Or are you going to mandate a certain time? There's just plenty of things that I'm waiting to I'm looking to the founders to see how they're all going to figure out how to make it work when you have really both remote and in person trying to coexist.
And just continuing from that, for lack of better terms, is it a turnoff to you when they're like, hey, we can have a remote team and everyone's scattered across working different time zones, as you're looking at companies or continuing to work with these founders? Does that matter so much to you from an investment standpoint?
Not anymore. I would say if you'd asked me, I'm sure if you had asked me 5 years ago, it would have very much mattered. And in my own companies, we had some remote, but it was very limited. And I think like everybody else, I've been pulled along by what people have had to do in the pandemic, and been surprised by how productive a lot of companies are and how well things are going, even though people are working on their computers from home, including us.
Right. I know. I think throughout the pandemic, it feels like a lot of us have definitely started to work more. And I know the conversation around burnout has been apparent across several of us.
Yeah, there's kind of this, are you working from home or are you living at work? Like, I think it's the latter is bad, the former is fun.
Definitely. And wanting to shift gears a little bit here. So, LA is definitely a city that's unique and filled with diversity in all of its different ways. But in terms of the companies that you started to see doing well, I guess, what are the types of companies that you've started to see do well in the LA ecosystem, and with that have had maybe more favorable access to VC funding?
So in terms of what's doing well in LA, I think it's everything now. I mean, LA is $1 trillion market. It's the second biggest market in the United States. It's like there's certain companies that I think gravitate here, like logistics because of the ports, or aerospace because of the aerospace history. But really, LA has arrived, I think, as a place where lots of technology companies can come in all kinds of, guises and grow here. I think the in terms of who's getting venture funding, like things are getting a little tiny bit better about um, VCs being aware of looking outside of their own bubble and giving more opportunity. We're not giving more opportunity, but taking the opportunity to fund people of color and founders who've been ignored, frankly, in the past. And it's really slow. It's a little bit better, but it's still like I'm on a lot of I end up on a lot of panels and a lot of calls and a lot of things where there's a lot of dudes who look like me, right? And that's, I think, something that the industry is like I said, it's getting better, but it's probably not fast enough for a lot of people.
Right. And I mean, especially with all of the events happening in the, throughout the pandemic, of course, there's been the uprise and even more conversations happening around like Black Lives Matter, for example. And I know, I mean, there's also specific funds or firms that are out there, whether they're starting to invest, maybe it's Black founders, people of color, women, LGBTQ and whatnot. But, what can we actually start to do to help move the needle towards more equitable funding in LA and just across the broader market?
I mean, I think that the people giving the money need to change, right? I think I can't change my own self, but I think that who you hire to be a VC partner or an LP, who give money to VCs, and the more you get people in those positions to make the investments, the more likely they are to be smart about seeking out founders who have, good ideas and not being distracted or biased, consciously or otherwise, to whom they're investing. So I think I'm very happy that at least one of my partners is a woman, and I can see that we're getting deal flow from her that I wouldn't get. She's part of networks that I'm not a part of, and it's nothing but good for us. Not that's putting equity aside, for opportunity for us. There are good companies that come into our pipeline that wouldn't have come otherwise. So I think that's where it has to go. And there's some great new funds in town where the people, the partners are people of color, and I think and women, and I think that those funds are helping to change things.
Right, and I think it's important. I mean, you mentioned having a woman partner on board and all these access to different networks, and the referral starts to come in when one founder has a good experience. They might be in a similar network or know someone, and they can start to do that referral, if you will. And then I do see another question here from the audience as well that kind of blends into us talking about the LA landscape. But what are some of the challenges you foresee for the tech scene in the upcoming years in Los Angeles?
I mean, I think California is pretty expensive. We've been the beneficiaries of that to some extent, right? Because San Francisco has become less appealing to some people, and we've definitely had some migration, including my partner Minnie Ingersoll, who was in the Bay Area and moved down to join TenOneTen. I think but the more that there are other markets that are fertile for doing startups, the more people will spread out to those markets and build companies elsewhere. So to the extent that you care about companies being in LA, that's a risk. I think for companies that are here, there have been some pretty big investments by the big big tech. We've got a big Google campus, and Snap is getting bigger, and those, if you look to the Bay Area, those companies push up prices, push up salaries, which is good for people who are earning the salaries, but harder for startups who are trying to compete with those companies. But I think things look really good for LA. I mean, I think generally it's a good market where, we do have this big economy that's very diverse in a bunch of different dimensions. And I think LA is going to keep continuing to rise, and, the next 5 years should look better than the last.
Yeah, there's definitely a ton of companies that are starting to open, the Google campuses down here in Southern California. And I mean, they've been coining this, but Silicon Beach down here for sure.
Yeah, it's an old term.
It's definitely an old term now. And I mean, I have two final questions before I want to switch over to the additional audience questions there. But as we're kind of wrapping things up, I mean, from your eyes, what are some of your go-to resources for content, whether it's from an investing standpoint, business, or just being able to keep up to trend with some of the things you're closely watching?
Oh man, put me on the spot. I mean, I go to DataCon and I learn everything I need for the entire year. I don't know. I read all the industry stuff like TechCrunch and Strictly VC, and try and follow on what's going on in the funding landscape. There's a bunch of podcasts I listen to, especially my partner Minnie's, which is a really good one. If you want to get to know the VCs in LA, listen to Minnie Ingersoll's LA Venture podcast, which you referred to earlier. But there's just so much depth of information on the web now that it depends on the industry, it depends on what we're looking at. But yeah, I don't have a great answer beyond that.
All good. I definitely threw you on the spot there, but you heard it there. David did say go to DataCon and go to LA Ventures podcast by Minnie, his partner over at TenOneTen as well. And in terms of, what's the best way for our audience to get in touch with you following this?
At TenOneTen? Just
for you or TenOneTen if they wanted to get connected with you.
I mean, you can go to our lovely website at TenOneTen.net, and there's a fair amount of information there, and you can write us. You can write me at david@TenOneTen.net or info@TenOneTen.net.
Perfect. And then now to shift gears, I know there's a handful of audience questions here. This one is from Savalis Colbert. If a company has an AI solution with very little training data, is it okay to simulate it man behind the curtain, Mechanical Turk? And what's the best way to present this?
Yeah, I think that falls into doing things that won't scale, right? If you have to fake it, there are a lot of. I think it's smart a lot of times when founders come and say, you know what, we're doing this, we're solving this problem, and to me, it's always about like whose problem are you solving? What does your tool actually address? And there's a lot of cases, particularly in ML, where trying to do it 100% is just agony, but doing it 80% and having some humans in the background dealing with the other 20 is a super efficient way to do it. And we have a lot of companies, sort of bootstrap their data like that, or even do it indefinitely. So I think it's okay to say that as long as you're really, really clear about what's actually happening.
Mm-hmm. So don't hide things from your investors as you're pitching.
I think that's generally a good rule. Like, you really don't want your investor to be like, "Wait a second, you didn't actually build that? That's really Johnny behind the curtain." No, yeah, that's not a good angle.
Right, not a good look there at all. And another question from the audience: someone is working on slides and they're split between two approaches, given they have a limited number of slides. There are options that they're bouncing between, or maybe there's a better option as well, David, that you might recommend, but debating between having a personal story that would outline the problem and why they created this versus the problem solution aspect where they highlight 3 general problems and the 3 general solutions to accompany it. What are your thoughts around that?
I mean, I think, first of all, I think slides should have not very many words on them, because people don't read too much. And even if you do get into a pitch, you know, it's better for you not to be reading slides. So slides to me are always like an adjunct to a presentation, and they should be simple enough for someone to take the meeting. And then when you're giving the presentation, you know, you can fill in the story with your, you know, your talk track. And so for that, I think, you know, having a little bit of personal story, you know, personal story and why I created this can go in one slide. It doesn't have to take a lot. And it doesn't have to be a lot of words on that slide. And when you're in the presentation, then you can dig as deeply as you like into your personal story. And then problem solution, I'm curious why this attendee needs 3 problems and 3 solutions. I think if you're solving 3 completely different problems with the same software, I would focus on one and then allude to the other 2 probably. Or if you desperately want to show that it's generalizable, talk about 2. But I think it's you know, one thing that we look for in a founding team or a founding situation is a very focused go-to-market to begin with. So if someone says, I have this widget, it's an AI doolally, and it's really smart, and it can solve problems for the logistics industry and aerospace, that's kind of a flag, because we want to see that, you know, not only is the technology good, but the go-to-market is good. And it's very, very hard to launch your product into multiple markets. You know, unless it's a very horizontal thing, like if you're pitching Slack or something like that. But still, we would want to see focus. Like, okay, if you're pitching a communication tool for teams, what kind of teams, what size, how are you going to go to market? Is this better for tech companies or not tech companies? Is it small companies or big companies? The more focus we see, the better. So that was a little drifted off of what's just on slides, but I think it's an important point.
Yeah, absolutely. I think, you know, having too much information can also harm individuals as well.
Super, yeah. Keep your slides lean. Get to the point. Get to, you know, put things in bullets.
And then attendees, if there's other additional questions, feel free to drop them into the Q&A box as well. The next one that we have here from an attendee, how do you look for a competitive advantage in an early stage startup that's pitching to you in a crowded market like digital health, as an example?
The founder has to tell us how they will deal with this competitive situation. So, you know, it's usually not a good answer to say we're just going to be better than everybody else. We're going to do the same thing but better. So having some kind of idea on go-to-market, some kind of idea of defensibility, and it can be defensibility in the product, it can be defensibility in your approach to the sales, it can be something. But, you know, and we don't expect you to have it on day one because you're a brand new company. So, you know, it's not reasonable to expect a brand new company to be able to compete with everybody. But to have that answered is a critical part of deciding whether to make an investment.
Awesome. And I know we have a listener calling in, Rafi from Stargazer. He says, hey David, as a startup, how should you deal with the fact that the value propositions are relatively late to see? In our case, we promise an improvement in profit based on the right stakeholder decision, but it also takes time until they are quantifiable.
I probably have to know more detail, but I think this is a really important question that Rafi is raising, which is sort of time to value with your customers. And like, you know, I think different customers have different tolerances. So a consumer going to a consumer app, man, they better get value the second that they download it. And it's a matter of like how many fields you make them fill in before they get value back out of the app. For a a tool for an investment firm, the time to value might be slower, but the customer needs to be super convinced that that value is coming, and that period, whatever whatever it is, has to fit within their tolerance.
Hopefully that answers your question, Rafi. I do not think I see any additional questions in the Q&A that haven't been answered yet. If there is, yep, that did answer Rafi's. Awesome. That's why we have David here. All right. I think we're in a good spot to wrap things up. Again, thank you so much, David, for joining us for our Ask a VC Fireside chat. And again, if you want to connect with David or TenOneTen, you can visit TenOneTen.net. And for those who are interested in participating in DataCon LA Startup Showcase, you can visit. I will drop the link in the chat room below. And then I believe we'll also be sending out a follow-up email for all of our attendees so that they can submit their pitch deck there as well. I know we'll be joined with TenOneTen for that Startup Showcase event. And then also this video will be posted on DataCon LA's YouTube channel as well. So lots of different places for you to rewatch and really dive into some of the different points that we did talk about. But thank you so much, David, for joining us on this fine afternoon. And thank you to all of our attendees for tuning in as well.
Thanks for everybody for coming, and thank you for hosting.
Thank you, David. Thank you, Germain.
All right, take care.